Good afternoon. Welcome to Mid-Cap Radar. Mid-caps which are sulking in trade today, a big cut there, though they have recovered from the lows. The Nifty 2 of the highs of the day. Small caps also seeing big cuts. So though the Fed outcome is as expected, looks like markets have come in for some profit booking.
Profit booking at the higher levels, we opened, I remember, but after that, it's been quite a bit of intense selling pressure. And like you mentioned, the broader end of the markets bearing the brunt of the majority of the selling pressure. But quite a lot lined up on the show. Let's start off with the top headlines. Market sees profit booking from morning record highs. Mid-cap sees selling. FMCG and banks clock gains, while oil and gas, along with PSU banks, under pressure.
The Supreme Court has rejected pleas filed by Vodafone Idea and Bharti Airtel for recomputation of AGR dues. The move is a big blow for cash-strapped Voda Idea, which will now find it tougher to compete with its stronger peers. Vodafone Idea down nearly 15%.
GE T&D under pressure after promoters Grid Equipment and GE Grid Alliance announced an offer for sale in a bid to offload 11.7% stake in the company. The floor price has been determined at 1,400 rupees per share.
Wockhardt surges in trade after investigational drug Xenic cures complex case of meningitis. Management tells CNBC-TV18 they expect the drug to be in the global market in 2026 and could look for out-licensing opportunities next year.
BSE under pressure after 3 days of rally. The stock sees profit booking down nearly 5% in trade today.
Okay, those are the top headlines, but the biggest headline, of course, is what's happening with the mid-caps and the small caps right now. It's almost a 1,000-point cut that we're seeing on the mid-caps. And if we talk about the small caps, that one is seeing a bigger cut. But yes, from the lows of the day, at a point in time, we saw mid-caps seeing cuts of more than 1,100 points. It was down 2.5%. This definitely has recovered. So has the small cap index right now. Nifty up just 30 points. It's almost down 200 points from the highs of the day as well. The bank Nifty as well. It is outperforming the majority of the indices. But yes, it's up around 200 points. FMCG leads the pack in terms of movers today. So consumption themes continue to be the big talking point as well. But it's a Thursday that's feeling like a Friday today, Vivek. What about you?
Well, market bulls not feeling the same, at least in the broader end of the markets. But of course, given the fact that we have so much action happening, generally typically see so much action on a Friday second half. Now, when we're talking about the markets today, the PSU stocks have taken quite a bit of a knock. Some of the PSU names today, especially names like Concor, IRCTC, continue to see some selling pressure. In fact, the Nifty PSE index down over 2.5%. But a whole host of stocks, especially from the broader end of the universe, is what Hormaz has on his list. This is our special segment, Mid-Cap Movers. Hormaz, take us through the list.
Sulking is the word, right, within the broader markets. Even if they are recovering from the lows, they are still substantially down for a day's action, and the mid-cap index and the small caps as well. So we'll start off with the losers today, and Chambal Fertilizers is leading the losses on the mid-cap index in today's session, 7.5% lower at the lowest point of the day, as is IIFL Finance, another 7% down here. BSE, as I just mentioned, seeing some bit of profit booking today, as is Torrent Power, a recent high flyer as well, another 5% shaved off on Torrent Power as well. Some of the AGR damage that took place in earlier this morning, but before that, the PSU stocks that are under pressure today, Oil India, HAL, barring NTPC, almost all PSU stocks are trading with losses in today's session. Even BEL, the recent Nifty entrant, will start trading on the index towards the later half of this month. As you mentioned, Vodafone Idea and Indus Towers not having a very good day at the office. Vodafone Idea at one point had slipped below its FPO price, so that is seeing some bit of a damage. But stocks that are doing well on the volume front, those will come up on your screen. And even then, the volumes, the stocks that are seeing some bucking the trend today, Rainbow Medical, Suven Pharma is one of them, KPR, United Breweries are seeing some bit of gains on very strong volumes in today's session. And lastly, some of the stocks, some of the other names that are doing well in today's session include PB Fintech, Ajanta Pharma, and Campus Activewear. Back to you guys.
All right, that's an interesting list. A lot of these bucking the trend, and how. If you look at Neogen Chemicals right now, it's up 10% yet again. Remember, day before yesterday, It was Avenda Sparks initiating coverage, and the stock was up 15% then. Yesterday as well, chemical stocks did really well, and again today it's an 11% pop on that one. So just watch out for that one. There's a lot of exuberance that we are seeing in this particular name. So important to look at the fundamentals as well. But it's a good time to welcome Rachna Vaidya from rachnavaidya.in for a technical check on the markets. Rachna, good afternoon. Thank you so much for joining in. What are the charts suggesting now? Will we see a bounce back? Do you think the pressure that we are seeing from the highs could continue? Tell us more.
Yeah, good afternoon, and thanks for having me here. Yes, Nifty is definitely facing some resistance at the level of around 25,600 on futures. And despite having the kind of news from the US, as it was much expected, the markets are still not behaving the way it was expected to behave. But nevertheless, once this sticky resistance of 29,550, 600 around on the futures is taken out, the rally should continue because the chart setup suggests that the charts are quite strong and it is only a day of consolidation, nothing much. That too at the higher end of the range, so near the highs of the previous days as well. So everything appears to be good on a medium term or a few days basis. It's just that the day is not favorable for the bulls, and so the consolidation is happening over here, just as we have seen in the past few days as well. The AD ratio, etc., is not in the favor as of now. So some consolidation, after which the rally, I expect, should continue.
Good afternoon, Rachna. Thank you so much for joining us. Rachna, what are your top technical picks for the day?
Yeah, coming to my technical picks for the day, amongst the large caps, if I speak so, should be SDFC Bank and Unilever. Both of them are looking good. SDFC Bank, I believe, has formed a very good base, after which it should be continuing to rise the way it has risen in the past few days. And very soon, if somebody is willing to hold for the time period, say up to Diwali, 1st of November, then it is expected to show us a level of 1790 on SDFC Bank. And similarly, Unilever has started a move after many days, which is just the beginning for it's the first day today of the move. And Unilever can be going up to 29.50 again on the futures. Coming to the mid caps, if we talk of mid caps, there are two counters which should do well. One is Jubilant Foods and the other is Voltas.
Okay, all right. Take that point. The consumption space continues to do really well. Thank you so much for joining in, Rachna, today with your picks and the technical outlook as well. We'll do one thing. We'll slip into a break. When we come back, we'll put focus on our mid-cap spotlight segment and talk about a lot more other stocks as well. Stay tuned.
Welcome back to Mid-Cap Radar. Well, once again putting the focus on a few of the telecom stocks as well as, the telecom infrastructure service provider continue to remain under pressure. Indus Tower, however, has seen a minor recovery. It saw an intraday low of close to 366 rupees a share. Stock has rebounded marginally to 390 rupees a share. The stock continues to remain down almost 9%. But moving on, the stock in focus right now is Gillette. The company has witnessed a margin structural turnaround by almost 200 basis points in FY24. Mangalam joins us to tell us more.
Well, Gillette held an analyst meet yesterday, and for a category where people thought that the increasing trend of beards would impact their sales, that is not the case to be. In fact, over the last few months, if you look at it, the stock has given massive returns to shareholders, and that's largely because of a couple of things that the company has been doing, and some of them they've told the analysts as well. One, margins. They've improved structurally by about 200 basis points in FY24, led by cost savings and premiumization. They've launched a lot of new premium products as well. Male grooming, which is braids and razors, the category is a nearly 3,400 crore category, which is growing in mid-single digits. And in FY24 itself, they've had the highest ever market share for the company that they've had. The other growth vector for them is the female razor or the female shaving business, which has again unlocked a new engine of growth for them. So Venus, that product, has doubled in sales over the last 5 years and now contributes nearly double digits to the company's grooming sales itself. Then they have two other growth vectors as well. One is oral care, the other is appliances. Braun appliances now contribute 2% to the overall category in India. And in oral care itself, while the category they expect to grow at mid-single digit, remember they have launched lower price points in electronics electronic toothbrush, which is growing much faster. So this may lead them to grow faster than the overall category itself. And to add to all of these product launches and new category launches, they've increased their reach by about 1.5 times over the last 3 years as well. So while, there could be overall headwinds for the category, the company is making decent headway out there, and that's reflected in the kind of results that the company is reporting and the stock reaction that we're seeing as well. In an otherwise wobbly market, Gillette is holding up mildly in the green.
Oh yes, it is up around 0.2%, but in a market like this, that is green enough. But thank you so much, Mangalam, for joining in with all those details. Let's move on to our special segment, Midcap Spotlight. Vamakshi is joining us, and she's focusing on GET&D. What's happening here, Vamakshi, and OFS?
Well, absolutely right, Sonal. An OFS, a proposed OFS, is the reason why the stock has declined in trade today. In fact, the promoters, which includes Grid Equipments and GE Grid Alliance, have announced this OFS. Keep in mind that back in August, the company had intimated that the promoters were reviewing the shareholding to simplify their holding structure. Back then, they had also mentioned that the promoters were considering a minority stake sale, but they expressed a strong intention to continue as the majority shareholder block of the company. Now, through this OFS, the promoters are looking to offload nearly 11.7% stake, and they also have an option to upsize the stake sale by almost 3.9%, making it a total of 15.6% in case of an oversubscription. Now, keep in mind that the promoters hold 75% stake in the company, and in case if the oversubscription does take place and the option upsizing is also exercised, the promoter holding will still be standing around at somewhere around 60%. The floor price for this OFS has been determined at 1,400 per share, which is coming in at a significant discount to the current market price. The OFS will be opening for non-retail investors today and for retail investors tomorrow. So overall, this development does not bode well for the company in terms of the supply of shares that will be available in the market. The valuations too are quite elevated for this counter, adding to additional pressure, and resultantly the stock is down and out in trading in the trading session today, trading at the lower end, that is the lower circuit.
Okay, yes, 5% lower on this one. Thank you, Vamakshi, for joining us with all those details and explaining why we are seeing that cut on the stock as well. Let's talk about NTPC. It is in focus after a CNBC-TV18 news break was confirmed. Subsidiary NTPC Green has filed DRHP for an IPO. Vivek, you told us first, and it's final now.
Well, that's right. On Monday, we told you about how NTPC was most likely going to go and file the DRHP to launch an IPO for the green energy arm or the renewable energy arm of the company was concerned. So the renewable energy arm of the company is NTPC Green Energy Limited. The company has gone ahead and filed for a fresh issue of shares where via the IPO route, they will be looking to raise a whopping 10,000 crore rupees. Now remember, out of the 10,000 crore rupees in the DRHP, it is mentioned that NTPC Green's subsidiary, which is NTPC Renewable Energy, will be using 7,500 crore to go ahead and do a debt repayment. Now looking at the FY24 financials of this particular arm, revenues of close to 1,962 crore, operating EBITDA a little around 1,750 crore, and a profitability close to 344 crore. And remember, the company has very significant and ambitious plans as far as going ahead, number one, for capex as well as capacity addition targets in the renewable space is concerned. The installed capacity currently is around 3.3 gigawatt, but the company has said that by FY27 it plans to commission 20 gigawatt, and by FY32 company plans to have a 60 gigawatt renewable energy portfolio. On the back of that, number one, what we are still awaiting is the price band for this particular issue, but remember, this unlocks significant value as far as NTPC is concerned.
Okay, so that is about NTPC, some important news coming by, an important IPO as well, a big one that the street will be watching out for. Thank you, Vivek, for that. Let's slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned for that. Welcome back. Just at the flat line for the Nifty. The Nifty is up 6 points. It was very close to getting into the red as well. So it's a big cut that we are seeing from the highs of the day at least. The Nifty is at the day's low as we speak right now. It's almost a 200-point cut from the highs of the day. The high for today was at 25,612, and right now we're seeing cuts of almost 220 points from the highs. The mid caps will also come for you on the screen. There was a wild recovery that we are seeing. It was down less than 1,000 points. Now it has come back to those levels of cuts of more than 1,000 points as we speak. So the selling pressure, that continues. We'll have to see what happens in the last 1 hour. That is going to be very important for the Nifty as we speak. Moving on now, PVR Inox has been in focus as the company saw strong sales this season, while Shraddha Kapoor and Rajkumar Rao stars 3-2 saw stellar numbers at the box office. Re-releases such as Rehna Hai Tere Dil Mein and SRK's Veer Zara are also drawing crowds. CNBC-TV18 Shilpa spoke to CEO of PVR Inox Pictures, Kamal Giachandani, and began by asking him about company's performance in Q2. Listen in.
Q2, July and August have been extremely strong, and as you rightly mentioned, 3 has turned out to be something which never was expected to be this much. It was always expected it would do well, but the kind of business that we've seen is beyond expectations.
Right.
Fortunately, a lot of other films have also done well. Deadpool is another case in point, a film which did really well, and the fact that it was an adult film. With that rating, for it to do that kind of business, again, augurs well for theatrical. Surprisingly, the re-releases have also done well for us in Q2. Tumbad, a recent release, film which came out pre-COVID, and it did fairly modest business, but it was always appreciated. Critically it was acclaimed, a lot of people saw it on streaming. And this is one example where there is a positive cycle between streaming and theatrical. People saw the film on streaming.
They wanted to see it.
And they loved the movie. And because the theatrical experience is so differentiated, as soon as it came out in theaters, people are back in strong numbers.
Given how the rest of the year is expected to pan out, then do you see that, do you expect an improvement in the average ticket prices also, because that sort of dip, and understandable because there were no big releases, but with very big releases expected, then how do you expect that trend to go forward? And while new re-releases are seeing 30 to 40% occupancy levels, how are you looking at the overall occupancy levels settling in?
I think on the ticket price compared to last year was about 258 rupees, the blended average ticket price. We will cross that.
Okay.
Will it be much higher? What percentage higher than last year? Difficult to comment at this point, but we will definitely cross that. Looking at the lineup in Q3, we feel fairly comfortable with the ticket prices where we are. In terms of overall occupancy, I think last year was about 26%. This year is also tracking around the same percentage. But I would say that the next year that the next financial year that we have, with the kind of lineup, the films which have been sort of pushed to next year, both Hollywood as well as Hindi as well as Tamil, Telugu, I think we are pretty set for a very sort of strong next financial year, much higher than what we have this year, for sure.
Right.
And I think we will see numbers which would pretty much be the best numbers that we've had post-COVID.
Well, a very interesting conversation there with the management of PVR. Having a look at the mid-cap index and the small-cap index. Once again, mid-cap index now trading with cuts of 1.6%. So very significant cut seen over there. And even when you're talking about the small cap index, that too is a significant cut. Now, Shilpa also caught up, with the management of PVR. They had something further to say. Let's listen in to those bites.
In us joining, we did not want to, like you said, touch the mantle, the existing mantle and the infrastructure that have been in the process for many years. It took a long time and it took a lot of people and a lot of ideas to get PVR Inox to where it is. So we're not here to, to restructure or change things, as they say, but we're here to bring in our fresh perspective wherever we can, to innovate on technology and definitely become that bridge between the company and this newer generation of consumers. Because the way people are consuming content today is very different from even 5 years ago.
Understanding definitely the asset, what the existing asset is, but really accentuating the brand beyond the asset. I think there are many wonderful innovative ideas that we have in the pipeline in regards to repurposing auditoriums, repackaging what the current skeleton of the cinema ecosystem looks like, adding more marketing activations as well as acquisitions of different types of film. So all in all, I guess it's finding that that differentiation between just the asset, stretching the brand a bit more, and really conveying what the new age of cinema is to the modern day consumer.
That was our colleague Shilpa, catching up with the next in at PVR. But with that, it's all the time we have on this edition of Midcap Radar Mutual Fund Corner. When we return.